In this video, we are going to talk about the partnership accounts. Okay, so here in this question, Tadin and Yedid are lawyers who have been partnership for many years. The partners provided the following trial balance. So a trial balance is given here. Some items are in debit side as well as some items are in credit side. Okay, so here some additional information also given, like rent rates and insurance include an amount of $1920 for 1 year, 1st March 2024 to 28th February 2025. At 30th April 2024, $1,800 for salaries were due but unpaid, that is accrued expenses. Irrecoverable receivables 670 were written off, so that is bad debt, irrecoverable debt, written off. Okay, so depreciation is provided under straight line method for fittings on and equipments. And partnership agreements provide the following, like interest on partners loan, interest on drawings, interest on capital, salary, and residual profit is shared 60 is to 40. It means 6 is to 4, yeah, in that ratio, 60 percentage and 40 percentage. So here they are requested to prepare the income statement for Tantin and Yadit for the year ended 30th April 2024. So this is, first we have to do the income statement and we need to find out the profit, then only we can do the appropriation account, right? So here in this, first of all, for every problem we need to find out the financial year. Here the financial year is ending 30th April 2024, isn't it? 2024 30th April. So what is the financial year here? Financial year means it is starting from 1st May to 30th April. 1st May 2003 to 2004. This is the financial year. Okay, so first we have to do the income statement. So it will be, here there is no purchases or sales, or there's no trading sections. We cannot do trading section here. Revenue is directly given. Okay, so that we are assuming it says gross profit, because no other information related to the trading section is given, or only the expenses and revenues given which is related to P&L account. So I'm starting directly with the revenues. Okay, so revenue is that you can take in the second column, 236,350. Okay, then we have to take expenses less expenses. Okay, expenses like expenses. So I'm first taking salaries. Okay, salaries. So this is the first expenses. Salaries 79,800, but we have an adjustment here. 1,800 salaries due 30th April. So at the year end 1,800 is due. So here I'm writing salaries. Okay, salaries. The adjustment is 79,800. Since this is a accrued expenses, accrued should be added in the income statement. So plus 1,800. So 1,800 we will get 81,600. Okay, so salary is done. Next is rent and insurance. Rates and insurance. Rates and insurance is 17,320. Okay, rates and insurance. Also we have an adjustment here. We'll come to that. So first write rates and insurance. The amount is 17,320. Okay, 17,320. Now go to the adjustment. Rates and insurance include the amount 1920 for 1 year. Okay, year one. For a year, it is starting from 1st March to 28th February 2025. So as we already know, our financial year, it is starting from 1st May. So May, June, July, August, September, October, November, December, January, February, March. Here March onwards, March 2020 to 28th, it means for the next year. Okay, 2025. So this is prepaid expenses. So we are starting from March onwards. March. Okay, here we have a timeline for the financial year. So March 2024, okay, 2024. So how many months here? March and April. Only 2 months in this year. 2 months. And it is spread up to next year 2025 March. Okay. Right. So this is for 1 year. So we will what we will do, prepaid will be deducted. So first of all we need to find out how much is the prepaid. So we paid rent and rates 1920. Total we paid 1920. That is for 1 year. So we have to deduct the amount which is not there in this year. Okay. So 1920 for entire year. So 1920 divided by 12, we will get 160 or something. Let's calculate 1920 divided by 12. It's for 1 year means 12. Okay. So each month it is 160. Right. So how many months are this year? Only 2 months are there. It means only 2 months means we have only 320 is related to this year. Rest of everything is related to the next year. So 1920 minus 320, all are prepaid. Okay, 1920 minus 320, or this 1600 is prepaid for the next year. 1600 is prepaid. So prepaid should be deducted from the income statement. So rates and insurance 17,320 minus 1600. Don't take the entire amount of 1920. Don't deduct it from your rates and insurance, because here it's clearly given it's for starting from 1st March to 28th February 2025. Our year end is 30th April 2004. Okay, so from that date onwards, all these months are prepaid. So April, 30th April, after that May, June, July, August, September, October, November, December, January, February, March. Right. So how many months? May, June, July, August, September, October, November, December, January, February. Isn't it? So 1st March onwards means 28th up to 28th February. So it's 10 months. So either you can calculate through this method, or you can calculate 1920 into 10 divided by 12. Also that will give correct figure. So do it. 1920 into 10 divided by 12 will be 1600. Okay, this also will give the same amount. Okay, so either you can follow this method or this method. Based on your logic you can do it. Okay, so 1600 should be deducted from that. So you will get 15,720. Okay, so that is also done. Rates and insurance and salaries. The next one is advertising. Advertising, there is no adjustments, so directly take advertising. Advertising is 16,730, isn't it? Next is office expenses. Is there is no office expenses, there is no adjustment. So office expenses also I'm taking. Okay, office expenses is 6150. So I'm taking that 6150. Okay, next is we have interest on loan from trader, that is 1200, that we will take at the last. Okay, premises is SOP item, it's a SOP item. Premises is an asset. Fixtures and fitting is SOP item. Provision is also will not be taken. Receivables in the debit side means it might be current asset, isn't it? It's a current asset. Current asset means either it will be prepaid or the accrued income. So that also will not come here. Receivables, don't confuse it with the income. Okay, it's a debit balance. So all the revenues will be in the credit side. So cash at bank is also SOP. Cash in hand is also SOP. Loan from Tadin also SOP item. Okay, and the capital is also SOP item. So here the next one is the adjustment irrecoverable debt receivable, right? Or irrecoverable debt created written off, or irrecoverable receivable 620 written off, that you can take directly. There is no other adjustment. So irrecoverable debt, it's a expense. Irrecoverable debt 670, right? Yes. So apart from that, one more adjustment we have, that is depreciation on fittings and equipment to be charged 15% using straight line method. So directly from the cost we can charge it. Fittings and equipment, see this one, fittings and equipment, 70,000 is the amount. So it will be 70,000 into 15 percentage. Okay, so that is a, take it as an expense, depreciation of fittings and equipment. Okay, equipment, it will be 70,000 into 15 percentage multiplied by 15 percentage, you will get 10,500, isn't it? 10,500. So we took almost all items, so total it 81,600 plus 15,720 plus 16,730, then 6150, 670 and 10,500. So you will get total 1,31,000 or 131,370. These are all the expenses. Okay, we don't have any other income, so directly take revenue minus expenses. It will be, you will get, deduct these balances and you will get 104,980, isn't it? So this is known as profit from operation. Okay, profit from operation, not net profit, profit from operation, because we have to deduct the interest also. Interest is there, loan interest, isn't it? So take loan interest here. Loan interest is 1,200. Okay, deduct it, then you will get 1,103,780. that will be profit of the year, or net profit for the year. Okay, profit for the year, so that will be your net profit also, right? So this is the way to calculate income statement, net profit from the partnership accounts. Now directly we'll go to the appropriation account. Appropriation account is a firm's account. Appropriation is just an extension of P&L account. Okay, profit or loss account. So we'll start with the balance of the profit. Okay, how much balance we have in profit or loss account. So we'll start with the profit for the year. Okay, so first take profit for the year. Here you think from the firm's point of view. If the firm is losing money, then deduct it. If firm is earning money from partners, then add it. Okay, like that you can think while making appropriation account. So profit for the year is 1,03,780. Okay, it's directly it will come here. Okay, so now think like what are the things happening in the business, like whether the business is losing money or gaining money, that you can check it. Okay, now see here, we took all the adjustment. Apart from this, we have other adjustments like interest also we took, right? Interest on partners loan also, that will be in capital account. Then interest on drawing, yes, interest on drawing is appropriation item. Interest on capital is also an appropriation item. Salary is also appropriation item. Okay, so interest on drawings means drawing is how much for us? See, drawing is given here 34,300 and 46,500. So check if we are a firm, or if you are doing from the point of view of firms, drawing, interest on drawing is expense or revenue for the firm, because partner withdrawn money from the business, that is drawings, isn't it, for their personal use, and partner have to pay back this to business. So that is a income for the firm. So that is, it means it's a revenue, right? So we can add that interest on drawings. Add interest on drawings. Write the name of partner, Tadin, right? Tadin, and add it, right? So how you will calculate the interest on drawings. So it will be here for Tadin will be 34,300 into 5%. It will be 34,300 into 5 divided by 100 will be 11715, isn't it? It will be 1715. Like the same you calculate with the Yadid also 46,500 into 5%. You'll get the sum amount. Okay, so take that amount to interest on drawings. So right here for Tadin it will be 1715, and for Yadid it will be 2325. Okay, total you can total it and you can write here. So this should be added. Okay, 40,000 40, right? 4040. Now check, is there any other item to add here? No, right? Interest on capital means that is the money firm have to give, right? Firm should give to partners. So it is a it's losing money. Okay, it's outflow from the business, so that should be deducted. Salary also firm have to provide to partner means salary is also outflow, right? So these both are the remaining both are outflow. So we have only interest on drawing here as inflow. So that we can add it now with the net profit. So you will get 107,820. Okay, now less interest on capital, both partners. So I'm just showing the Tadin and Yadid. How we will calculate the interest on capital? Check the capital value here. Interest on capital is how much percentage? Check it. Interest on capital is 3% per annum, isn't it? So in the capital account is balance is 3% we need to calculate. So just calculating 125,000 into 3% and 85,000 into 3%. 125,000 into 3% and 85,000 into 3%. Calculate it. We'll get 3750 and 100 will be 2550, right? 3%. So the total is 6,000. Either you can write here or you can take here also. Okay, 6300, that should be deducted, so put it in bracket. Then we have one more item, salary for Yadid, right? So less salary to Yadid. Okay, it will be 10,000. That also should be deducted, 10,000, right? Now check the residual profit. So this is the amount we got, okay, after adding the interest on drawings. So deduct these two values, then you will get 107,820 minus 6,300 minus 10,000. It will be total 91,520, isn't it? That is the profit share. Okay, this profit should be shared among the all partners, means Tadin and Yadid, in the given ratio. So the ratio is given as 60% and 40%. Okay, so either you can take 6:4. This also you can cut. Sorry, 3:2. You can make it to 3:2 also. So it will be Tadin. Okay, profit share. Tadin will be 91,520 into 3/5. Then Yadid will be 91,520 into 2/5. See, this you can write 6/10 or 4/10 also. Okay, both the ways it's it's acceptable. Otherwise you can reduce it and you can write also. If you are confused, you can take directly. So 91,520 multiplied by 3 divided by 5 will be 54 912. Okay, then 91,520 into 2 by 5 will be 36,608. So total will be 91,520. Okay, this is the calculation for the profit or loss appropriation account. This is profit share. Okay, residual profit after calculation, after deduction of all the other adjustments like interest on drawing, interest on capital, etc. You will get a profit, that is profit share. You have to share the profit, remaining share, to the old partners in the given ratio. So this is all about the partnership accounts, how to do the partnership accounts. Okay, so here there are some theory question also, that also I will finish. Was state one reason why the partners might consider reducing their drawings. So see, because they have to pay interest on drawings, isn't it? So that will be one of the reason, right? To reduce interest charge on drawings, to reduce interest charge on drawings. See, if you are drawing anything from the business, you have to pay interest also. So that will reduce the drawings from the business. So partners will try to reduce the drawings from the business, right? Then which accounting principle reflect the partners intention to continue the trading indefinitely? It means indefinitely, that is a going concern principle. Okay, business will go on, going concern. Okay, so this is all about this partnership question. Just go through the question, and if you have any doubt, just comment on it.